Hey everybody, DayTraderRockStar here, and high probability watch list for the week of, drum roll please, it'll be 28th, I believe. That's 28th. Yes, it's going to be August 28th, the last week of August. Really the last week of the kind of the official summer, right? Coming up to that, the end of summer. I can't believe how fast it went. But lots to talk about. I'm officially back from vacation. That it was both a great experience, and I always hate being away from the markets for too long, but I tried to stay in touch out there. I got a watch list out at the time out in Oregon, so the last watch list had a lot of good information on it. And the let me see what my main mix is. I want to turn down my headphones there. It was really just kind of overall cautious in the markets. So now we're back. I want to go over some things with you. I think it's very important. I talked about it a lot on the radio today. So if you listen to it, you're probably going to hear that over again. But I want to, of course, this is the HPS, the first part of the HPS watch list. The first part is a general overview of the markets, and I usually send this out to a lot of different zones, but then we save the second half for the setups going into the week for the members of Day Trading Radio. So consider a membership if you're not a member yet, please. So the first thing I want to announce is that the HPS watch list, normally you go to the dashboard, and it's up on the dashboard. It's right up here, HPS video. You click on that, and this is last week's watch list. It's very clean. You have archived watch list here. So I've been using that, but it's an old style compression I'm using for this, and it'll be easier for me to actually record this with some more updated technology. And we're moving the HPS watch list. It's going to be still on your dashboard, just moving it over a tab. So if I go back here, if you go back to the dashboard, the HPS watch list goes with the HPS site. So right now, this is the HPS video. I want to switch that over. Right now, you just have to go to the HPS list. Click on the list. It'll bring you to the HPS site. And up here, you'll see HPS watch list video. And you click on the watch list video, and it'll be the latest video up there. And you can actually scroll back and see all the previous videos also. So it's a different way of just accessing. Nothing else is changing on it. Just to be easier for me to update it going forward. Cutting out a couple steps and making it a little bit easier, and we're making the HPS site a little bit more just better overall. We're adding some stuff to it. I want to add the videos to it. I want everything to be in that HPS folder. Alright, so that's going forward. So that's where you'll find this video. Go up on your dashboard, go to the HPS list, and then go to the HPS video. And I'll try to change that tab so it just points to it, so you don't have to worry about it. So we're going to start off by just kind of touching base with last week's watch list. And I was very cautious, and I said, I think it's a good time to really apply a hedge to any long positions. There's just a kind of a rumbling, nothing that you could really predict, and I don't think anybody could predict when the market's going to take a real big pullback or take off or doing anything, but we are able to read signs and on a short-term scale really be able to trade it effectively for profit. But calling day-by-day action is a little bit harder. What day is going to be that. But everything on this chart, everything from the beginning sell divergence that we had, and again, our divergence is our number one setup. We had a perfect sell divergence here, and from that point the market has moved down quite a bit, 400 points off the Dow high. And it continues to, come down, bounce, push up here. At that point, when we had these three pivots, we had what was called a 1-2-3 pattern. And at 1, 2, 3, you need two pivots or 2 points on one side to make a straight line, and the other one to just drop the parallel line. And we usually trade 4, 5, and 6 if it is. And read in the stochastics as the price adjusts, gives us the opportunity or the clue to when the bigger move is going to come and what direction that's going to come. So all of it comes together with the HPS methodology, just about letting it set up. Right now, you did see, your trade opportunity was here for a bounce. We looked for a bounce back up to the trend line. We got a little through it, right up to the 20-period moving average, and then started pulling back again. All along, we continue to make a series of lower highs on the stochastics. And that's more of that negative long-term signal. So, you know, we did get a move back up. We're having a hard time with that 20-period moving average. We're not really turning back up aggressively. And there's rumblings out there. Now, like I said, I discussed this a lot on the show today. And personally, I feel that we have some downside coming. The other thing I want to add on is today we had a candlestick, a pretty decent, what we're going to call reversal. And a reversal candle, for our purposes, is a candle that takes out the previous high or low and then closes back into the pattern, and the tail should be twice as large, 2 times or larger than the body. Preferably, we like to take out as many days as possible to clear out, like down here, this little reversal here. That was considered a reversal candle, and we had a nice return on that. Up here was a reversal candle. We took out all the highs above us and reversed and closed higher, closed lower, and that was a real reversal. So we have that potential reversal here. We have the pop. It didn't take out this big candle here, but we got a couple pennies away from it. Almost enough to really call the double top divergence. And it's not even that we want a divergence here. It's not we're looking for one. The problem is here is that we actually held underneath that line and we reversed and we came back down. The reversal candle here was set up, you know, and we closed near the lows. Volume was picking up a little, but it was a Friday, and we have this kind of a coil there. So we don't know if there's going to be good news, bad news, what's going to trigger a move down or trigger a move up, but there's going to probably be something that does that. And that's just the name of the game right now. The one thing I always say is we could give you the best setups and understand where the market's going, but if news comes out, trumps everything. And excuse the pun. But it does trump everything, and any Trump news double trumps it. You know, you could do anything. So there's a lot of positives that are still to remain to be seen. You know, that comes with the new administration. You know, the promises, the tax reform, the healthcare reform. But there's now other things rumbling out there of talking about debt ceiling and shutting the government, and they're talking about the wall again. And there's you know, just a lot of conflict behind the scenes, and that just is that could turn into something more. We don't know. I mean, again, at this point, it is a guessing game. Everything on the chart tells me that we have a good shot of actually rotating lower. If there's good news, that cancels that and pushes higher. But as I see it, protection at this point is definitely worth the cost. Now this is a weekend. Monday opens up. Do we gap down, gap up Monday? Again, that's more of a gamble. We'll see what type of news comes out. If everything stays equal, everything's no news on either side, I do feel that this reversal candle, the lower highs here, and you know, just a lack of follow through. And underneath some major levels here, we had a retracement back up to the trend line and kind of holding underneath it, and some other things like that. So when we talk about hedging positions long, a hedge is something that counterweights what you have. One position, you go the opposite position. That way, if something happens and damages one side, you kind of hold and stay level. You know, you maybe gain something on the downside, as your longs might not gain or lose some money. It kind of keeps things even, while your overall purpose or overall objective is a higher move. So you want to hold on to those positions. That's one of the reasons. Or the other thing is just a clean table and just sit out the volatility here, which, you know, I don't think you should do as a trader, because that's what we come for. We come for the volatility. The short time frame trades that we're doing, during the day are textbook. They're perfect. These bigger moves are a little bit more difficult to time what candle's going to break down. Look, we're chopping around for 4 days here. Any type of good news is going to pop us. Any type of bad news is going to drop us. My guess is that a little bit more downside. So that's it. How do we act on that? Well, you could get many different ways. You could short individual stocks. You could short the futures. You could buy puts. You could, you know, do other combinations of things. So it's you know, right now I picked up some VIX calls. Now the VIX, the VIX is volatility index, and this is a hard one to trade. I'm not the biggest fan of this, but at the time, Sorry. No. At the time, there it is. There we go. Just gonna get this is the underlying VIX, and it's a volatility index. It actually reacts. It acts more as a a hedge for your longs. As fear comes into the market sells off. Usually get a spike in the VIX. Now this is the overall VIX, and the underlying the vehicles that you trade the VIX. There's many of them, different combinations, but I do the straight up the VXX. And the VXX, you're going to see, it's not going to give you a right judgment of it because it just went through a reverse split, which doesn't really affect us that much, if we do get the move that we're going to get, but I'll explain some other things on it. So if you did, at this point, the VXX is 47.68 and change. And when you got calls, or if you bought that, it's a straight up reverse split. Just opposite as a real split. Like if you had Apple and they split, it would cut the price in half, but you would get double the amount of shares. So a reverse split would be the opposite. If you had 10 shares and they did 10 for 1 split, you would have 1 share left at 10 times the price. So that's what happened here. So they announced a 4 for 1 split on the VIX, and it's because it got underneath a certain price, and they do that, and they have the right to do that. And the way they rebalance your calls and stuff, if you do have the calls, it becomes pretty complicated. The way they did it, I even have to read up on it just to kind of figure out how they're pricing the calls, because you still have the same amount of calls, but the underlying shares are split up, and then you're also given. Let me actually read this so to be more clear to everyone out there what happens to the VIX calls and stuff. To say the Option Clearing Corporation put out a memo for the reverse split, adjusted the numbers of the VIX shares per option on a pre-split contract from 100 to 25. The option strike are not adjusted. An underlying symbol now option to trade against is the VXX2, a new symbol which is set at 25% of the VIX price. These contortions require that the holder are not left with any fractional contracts. All right. So there's a little complicated underlying way of calculating this and how they're balancing everything so you have the same price. The secondary, the VIX2, right? After the reverse split, your contracts are adjusted that each contract has 25 shares of the new reverse split VXX as deliverable. The strike price stays the same, and the effective price of the underlying that the option is priced as in the current VXX valued is divided by 4. So the value is the same. Still own the same amount of contracts. The way they calculate it is totally different, and the way if you exercised your shares, you wouldn't get the full shares. You would actually get a fraction of those shares. One quarter. Much easier now if you were going to restart a position and the VIX calls, everything's already taken care of. And again, it would still work the same way. If the market did do some kind of flush, there would probably be a nice reaction on the VXX, possibly up to 60. Do the calculation. That's a nice move. Not saying it would, but I mean, I'm saying that I've seen 10, 20% moves in the VIX in over a period of a day or two. And that's the hedge I am taking, feeling like there is something brewing. I haven't out until about October on the options, and very hard to time this. As you can see, each little pop has been dropped, and it continues to sink, and it will continue to sink. A trade in the VXX is such a short-term trade; it's almost a gamble. A protection. You feel something, maybe a long shot, but the value. is proportionate to what I'm holding. That it doesn't really, you know, if the market goes up, I'm going to make more money in my longs than I would lose if this just got blown out and didn't perform or just expired worthless. So, you know, I am leveraged to the upside, but willing to hold this. And I feel that the value here, at the time I got it, was, you know, worth it. Now we have the split and the readjustment, so it's a little bit different, but it still would react the same way. But the other way is the SPXU. As you can see, this is starting to move back up a little, pop to pull back. Basically the same type of setup. And when we talk about the downward channel in the S&P, and we talk about that you know, that lower high in the stochastics really causing that coil stochastic, we're seeing the opposite here on the VIX. We have a series of higher lows, which, as you know, when I talk about market trends and stuff, when you see a higher low scenario playing up, that is a sign of a longer trend developing. So we have this small little upward trend here starting to show up on the SPXU. And again, it makes sense because that's opposite of what the S&P is doing right now. We're off the lower trend line. We're up on the upper side of the trend line on the SPX, which is the S&P cash. We're up here on that top of the trend line. And on this one, we're on the bottom of the trend line. So we should pull back on the top, push up higher on this. You've seen this pattern a lot of times too. Now, if this was like Motorola or something like that, yeah, it seems like an easy, yeah, the trend has been. But this is the SPXU. This is the overall market conditions. And this is actually the short side of it. I mean, if this was the regular market, it would look great to go long here. So why not the SPXU? Well, the market has been a short crusher, you know. And, you know, when that starts to happen, you have to realize what side you want to be fighting for, you know. The shorts are not the easiest thing in this market. This is an opportunity maybe. It's a gamble, a little bit more higher risk, so go along with that. But I think there's an opportunity here. So we're on the top of a trend line, about to maybe roll over one more time. Here's the SPY. Another way of doing it is shorten the SPY. Any good news pops it. Any bad news drops it. Longer term, you know, we could trade this area down here. We could even trade a divergence that starts to pop up. We could trade news. But do you want to take a gamble right here for good news to pop it or to drop it? There's a little spot right now. All right, and with that said, we're going to start the second part of the video, the HPS watch list, which contains the setups for the week, best bet, and everything. I'll cut the video short here. The second part will be members. Like I said, please make your way over to DayTraderRockStar.com. Check out the 2-week free trial to see the type of research we send out. The nice HPS watch list, which is automated. You'll get the alerts, you'll get your emails, you get your text messages when any of our signals are hit, our trades are executed. Everything is automated, and you know, you get special privileges of being a member with your own dashboard and a bunch of things. You just got to check it out. All right, so with that said, I will continue this video for the members. There won't be any pause there, and we're going to go over some stocks right now.